All right, guys, what's going on, everybody? Welcome to Stocks and Coffee. We usually do these on Saturday mornings, hence the coffee. But today, this weekend, I was busy traveling, so we're doing this thing today before 4th of July weekend. Give me a little shout out here. Let's see who's in here. And for those of you who are new, my name is Paul Singh. I run the swing trading service at Bulls on Wall Street. Josh, what's going on? Josh is a big part of us here at Bulls on Wall Street. John, what's going on? Anybody else in here? Give me a shout out. We've got a great turnout today as usual. What's up, Patrick from Pensacola? We've got Allison from New York. We've got Paul from Chile. All right, we got an international turnout today. Brandon from Dallas, what's going on? We've got Marco from Florida. Give it a few more minutes before we begin. We're going to do the usual here. We're going to talk about the market, the top-down approach that we use, what's going on. We're going to talk about what we're seeing heading into July earnings, which is going to be big. Talk a little bit about July seasonality. We'll go through some areas that we should be watching right now that are in play. And we'll talk about some trades we've taken and positions we have. And at the end, and we can also talk about it a little right now, Bulls on Wall Street heading into the 4th of July weekend always has a big sale. And I think the 4th of July weekend sale is probably the best sale that we have here. But we have a big sale going on, and it's usually popping up here when you go to the site. Maybe I accidentally clicked it off, but I believe it's 50% off the yearly, and you have your choice of one of the bootcamp classes that I've done for the swing trading services. So pretty good deal here. But let's get to it. Let's talk about the market. We always start with what's going on with the indexes. Then we hit the industries and sectors, and then we get to the stocks we're looking to potentially trade. So let's take a look here. SPY. Now, what's interesting here, look at where SPY is. We are at all-time highs right now. And I would say if you asked me about a month ago if we would be at all-time highs, I might not think so. When you think about some of the factors that were in play, we had June seasonality. June tends to be one of the weakest months of the year historically. So summer months tend to be slow. June tends to be slow. But as you can see here, very strong here with SPY. Then we think about some of the news events, the fear of it and fear of how the Fed is going to react to inflation. And we have the infrastructure bill that's been expected that still has not passed. That's holding up some of the areas that were really starting to move, like industrial equipment, even some of the reopened stocks, travel stocks. So if you think of all these things, plus now more corona news with the Delta variant, and that's spooking the market maybe a little bit, especially when we see other countries starting to rein things in again. The market has been very resilient. That's the point here. We've had all this stuff, and we even had a shaky middle of the month that looked like maybe we're going to break down. But the theme that we've seen since the March 2020 low has played out. Every time there's been a little fear in the market, it looks like we might dip further, it ends up being a good buy opportunity. And we saw that again in June. So SPY very healthy. Now, if there was one concern to point out in the market here, and if you guys have any questions at all, by the way, go ahead and shoot me a message in the chat here. Yeah, go ahead and shoot me a message in the chat. But if I had one concern at all, it would be that market breadth might be lagging a little bit. So if we look at SPY, you guys know the drill who follow me now, that always compare SPY versus the equal weighted ETF. SPY has the 500 biggest and best stocks, not equally weighted. Should be worth 0.2 each if it was equally weighted. Apple alone is worth 3%. Top 10 holdings are worth anywhere between 25 and 30%. So SPY doesn't really give you an accurate measure of what's going on with these 500 stocks, but the ETF RSP does. This is equally weighted. So Apple is worth 0.2% instead of 3% in every one of these stocks in here that make up SPY. is worth 0.2%. When we look at RSP, notice RSP is lagging a little bit. Where it took a bigger dip below the 50-day moving average and now is not at all-time highs. So this is the all-time high in RSP. If we look at SPY, we can see SPY is at above the all-time high. RSP is down here. So a little divergence in market breadth, but still, when we consider what's gone on in the market, I think the market is still pretty healthy. Now, if we look at the Qs, we see the Qs are at all-time highs, and then QQEW stronger than RSP. QQEW is the NASDAQ equally weighted ETF, and this one here is actually showing pretty good market breadth now. It's caught up to the Qs. So we are seeing, what this is telling us is very tech heavy. The Qs more focused on tech. And if we went pure tech, we could pull up XLK and we can see here, same thing, very strong. So very tech heavy, which is interesting because just a little while ago, tech was actually very weak. And this continues another theme we've seen for about over a year now. That is, there seems to be back and forth rotation between growth and value, between reopened stocks or travel stocks and at-home stocks, between tech and other areas. There's been just the same amount of money in the market, but it just keeps flowing in and out continually. And we're seeing that now where the Qs have taken the lead after being weak only a month and a half ago. So Qs, very strong. Now look at IWM. This is the small caps. Weaker. I mean, it's not a bad chart, but basically consolidating all of 2021. So we've got like 6 months of consolidation here, not at highs, but at least at the top of the range here. And hopefully we get a range breakout. Part of what is stalling IWM is a lot of the travel stocks, the airline stocks, the casinos that had been very strong. Like if I pull up the Jets ETF, you can see just how strong it was. And now it's kind of weakened here. Areas like that have more of an impact on the Russell, and that's part of why the Russell might be weak. My theory is if the infrastructure bill passes, if we get past this Corona stuff a little bit, travel is booming right now, at least in the States. These areas will pick up and we'll see IWM break out of this range, and that could set up a big move after a long consolidation in the Russell and smaller cap stocks. So that is what we're seeing in terms of the market. Support and resistance levels are pretty easy to see. I would focus more on the near-term support and the near-term resistance. Obviously for IWM, it's all-time high. Support level here at the 50-day moving average. Let's just check SPY real quick, where we are at all-time highs. If we do pull back, obviously the 9 EMA and this old high become important. 50-day moving average becomes important, and every one of these dips, if we really start to pull back, would become important support levels. So that's where we are with the market. We talked about market breadth. I have written strong here. Equal weighted, not strong. Part of the reason I wrote strong is just a reaction to the news events we've had. I mean, if you think logically about these news events, maybe the market shouldn't be where it is, but it is. So the post-Fed trend has been strong. SPY took this big dip here, but has been strong since that Fed, and this dip was related to a lot of the Fed inflation talk, but now has been strong ever since. So pretty good here. Now, if you have any questions on that, let me know. Dilip is asking, is there going to be a recording of this session? Yes, there will. Go to the Bulls on Wall Street YouTube page. It will probably be posted there. If not today, then for sure by tomorrow, it should be posted there. And then if you're on the Bulls on Wall Street email list, you also should be able to get a recording from there as well. So July seasonality. July, we talked about, and if you've been to the past Stocks and Coffees, May, June, historically weak. July is historically strong. So it's like you get these two dip months, and then July is the new earnings season. So middle of July, July 13, Goldman Sachs reports, July 15th, Morgan Stanley reports. You've got all these banks reporting around that time. And then in the July 20s, you have the big tech stocks reporting. So you can see here, here's a list of, the FANG stocks. And if we look at some of these dates in here, we can see AMD reports 727, Apple 729, Tesla 728, Amazon 729, Netflix 720, Facebook 729. So, end of the month, we'll see big techs reporting. So we're going to have banks reporting, big tech reporting. And then after that, into early August, we get the floodgates open and everything starts reporting. And that often leads spurs, especially if there's good earnings reactions, a big move in the market. So historically, July is good. And we'll see, seasonality has been kind of odd this year in that June has been strong when it's supposed to be weak. Hopefully July doesn't flip that and become weak when it's supposed to be strong. And we stick to the seasonality. Okay, all right. So we know July seasonality is strong. That should be in our mind. The reason I pay attention to seasonality, it kind of helps me gauge how aggressive I want to be. And then earnings, be aware, banks report mid-July, big tech reports late July. I would watch those earnings very closely, even if you don't plan to trade these stocks. Maybe you don't like to trade the heavier stocks. You want to trade some of the low floaters, the momentum stocks. The reason, even if you don't trade them, you should watch them because they can be good market tells, whatever their reactions are. So even if I have no interest in trading the FANG stocks or Apple or any of those guys, I will still pay very close attention to how they are reacting to earnings. Okay, it looks like we have a few questions here. Indo, what's going on? Indo, I know very well. Do you normally do scans or watch this the evening before or hours before the market opens? Yeah, so every day I have big watch lists. My main, what I call alpha watch list here is right now has 174 stocks in it. And I have a lot of other things I'm tracking, what I've related to coronavirus stocks, reopen stocks, IPOs, crypto, NFT, software, big tech, and so on. So I'm looking through all those lists daily. Stocks that look like they might be near setting up, I create a focus list of anywhere from 10 to maybe 20, 30 stocks that I'm watching for the next day. All right, okay, let's get to some of the areas we should be watching. We're going to talk about electric stocks. We're going to talk about blockchain stocks. We're going to talk about what I've defined as reopens. And what I've defined as reopens is basically stocks that will do well because of the reopening of the economy. And these are mostly stocks that got hit when the market tanked, when the pandemic first started. So that's essentially airlines, casinos, resorts, hotels, hospitality, eateries, all that kind of stuff. And even industrial metals and retail. So all of those things we're calling quote unquote reopen stocks. And then we'll also talk about FANG and big tech, which we've already kind of hit already. But let's go to the electric stocks. We'll go to my electric list here. Bunch of stocks we have put under the umbrella of electric. Now they're not all the same thing. So in the electric umbrella, we have auto manufacturers like Tesla and NIO. We have electric components that supply the autos. So, something like F-Cell, something like Plug, Pola, those types of things. And then also pure kind of solar plays like FSLR and SPWR. So we're putting all these together as electric. Sometimes they move a little differently. Maybe solars might be moving a little more differently than auto. But for the most part, when electric starts going, all of these things start going. Now, let's look at Tesla, because a lot of electric is basically in the same spot as Tesla is, which is they had huge 2020 runs. And then basically 2021 has been one big pullback. And the question was, is this a topping formation, or is it a continuation pattern? It was really tough to gauge as this was happening. So we've been looking for clues. So, we've seen here, Tesla made a high of 885, recently made a low of 552. So a pretty significant pullback, but in the grand scheme of things, still not telling us that it's breaking down. So now, recently, we have had a remount of the key moving averages and a hold of the 200. So that tells us we're potentially now in a continuation pattern, that it's not necessarily a topping pattern. So actually on Bulls on Wall Street, this is one of the positions we are in right now when Tesla remounted the 50-day moving average. And a lot of these electric stocks are now, after a pullback, either have already remounted key moving averages or support levels or resistance levels, or they're nearing them. So let's just go a few of these, and you're basically going to see variations of the same chart pattern over and over again. So NIO, which is a Chinese auto manufacturer, you can see here, very similar to Tesla, even a little stronger actually. So the big 2021 pullback from 65 to 30, so lost over 50%, but now is back up to 53. NKLA, very similar pattern here, pulling back, now testing a key moving average. Plug, same thing. We're essentially seeing in almost all these stocks variations of these same patterns. And what I'm going to do for you guys here is I'll copy this list for you, and I'll put it in the chat, and you've got the list of electric stocks that we are tracking right now. So that you guys should have access to this list. You can copy and paste it. If you got TC2000, you can create this exact same list here. All right, so that's electric. Definitely an area we should be watching right now. Area number 2 here is blockchain stocks. So let's pull up that list here. And I've got it listed here under crypto. So obviously you can trade Bitcoin, you can trade Ethereum, Dogecoin, whatever you're trading. We are watching the stocks related to this. Now there are some more pure plays, like say Coinbase, or the Bitcoin ETF, GBT Trust, GBTC. And then there's more kind of areas that would be related to that. So something like even Square and PayPal, because they're accepting some cryptos now. They sometimes will move with cryptos. Obviously Riot, Mara as well. So let's look at some of these. Let's start with coin, since this is more of, actually let's start with GBTC. GBTC, not anything we'd want to get into right now unless it started to show some strength. And of course, this is moving just like Bitcoin is. But now notice that some of the stocks related to blockchain are actually stronger than what we're seeing in Bitcoin or GBTC. So something like Riot, a much better pattern here. Notice that GBTC is down here. Riot has already tested its low and remounted key moving averages. And I think it's a very good entry right now. We have Mara here, same exact pattern. AMD, very strong here, testing all-time highs. We have NVIDIA. Of course, NVIDIA is a semiconductor company, but they are doing some blockchain-related stuff, and look how strong NVIDIA is. We just talked about PayPal and Coinbase and Square, also very strong as well. So again, another area we definitely should be watching. Very nice charts in this area. Okay, all right, so we've got electric, we've got blockchain, 2 very strong areas right now after deep 2021 pullbacks. Now, the reopens, we are seeing kind of the exact opposite of what we saw in electric and blockchain, where electric and blockchain had been pulling back and now are strong. The reopens had been strong through 2021, but now are pulling back. So let's just pull up JETS, which is an ETF for airlines. And what we see here is 2021 had been very strong here, but now we've had a couple of months of pullback. And the question here is, where are they going to pull back to, and are they going to find support? So I'm watching areas like JETS very closely, watching for that pullback to the 200-day moving average. Does it hold that level, start to show some strength? Does it remount the 50-day moving average? Since they're not in play right now, we don't need to get into the stocks, but with any of these ETFs, you can pull up the stocks that make up the ETF. So you can see here, JetBlue, Southwest Airlines, Alaskan, United, all in here. So I would be watching this area very closely, again, to find support. And I think eventually it will, and it will give us a very good opportunity. Let's go through a few other ETFs related to this. BJK would be resorts and casinos and gaming. Notice it's a little stronger than airlines, and maybe even a potential entry here, especially if it remounts a 50-day moving average. And then you can see the stocks that make it up. Win is always one of my go-tos here, and of course MGM. And then we have Retail XRT. Retail is actually a much healthier chart, trending very nicely. And of course, there are a bunch of retail stocks here. I'll pull up one that we are watching closely, both on Wall Street. SIG here, really nice pattern breaking out 2 highs. So that's where we are with the reopens. Essentially, probably not getting into them right now, but watching closely for opportunities. Now let's look at FANG and big tech. We know in about a month, most of these guys will have earnings. But let's just take a look at a few of them. Amazon here, one of my favorites, not for an entry right now necessarily, but historically when Amazon, when Google, when Facebook, when Netflix, when these guys, and this is going back, you can go back the last 10 years, when they have these long consolidation ranges for months, 6 months, 8 months, a year, and then break out of those ranges, that often sets up the next big run in these guys. So if you look at Amazon here, has basically been consolidating in a range from about 3,600 to a low here of 2,800. So 2,800, 3,600, back and forth for the last year, basically going back to July here. So it's been almost a year. Now we are back near the high and we have earnings coming up. So if we get an earnings breakout over this 1 year long high, this could set up the next big run. Look at here, Amazon consolidated for basically a year in 2019. Once it broke it, you saw the huge run here, and we might be setting up for another big run. Breaks 3,600, maybe it runs to 4,500 or 5,000. So watch this range very closely in Amazon. Let's take one more of the big techs. We recently got out of a nice trade in Apple when it rebounded the 50-day moving average. Now, a little bit extended, but overall, nice continuation patterns. These dips have been good buy opportunities. Anytime you see one in Apple, it's had another one here. I would watch for a little bit of a pullback and a break of this range. This range is its last earnings right here, and it's testing that level right now. I think if we could consolidate and break that range, Apple would be a very nice setup as well. All right, so we've gone over the market. We've gone over some areas to watch and stocks within those areas to be watching. And again, if you guys have any questions, go ahead and shoot me a message in here. Anything you guys want to talk about, just shoot me a message. Let's go over some positions we're in right now and some recent trades. I just talked about us taking that trade in Apple. Let me actually go over the trade more specifically. So you can see here, we had a higher low in Apple. We were looking at this as a continuation pattern, entered when it remounted the 50-day moving average, took profits near the top of the range here, a little lower than that, because we knew earnings were coming up and maybe there'd be a pullback. So we didn't get quite to the top of this range. I think we got out right around 134, 135. So that was the Apple trade. Let me point out one losing trade. We don't hide from our losses, but Beyond Meat here, we got caught in this range here. Really like this setup. It was consolidating for a while, so we got out near the 50-day moving average, and still a very strong stock that I'm considering re-entering here. It was a very small loss. We managed our risk well with this. Some current positions here. We are in skills right now, electronic gaming. This was a remount of the 200-day moving average and what we call an IPO bottoming formation. You see these IPOs, they'll often make these huge runs. The bottom falls out. And when you get a bottoming formation, you see the W pattern here, volume coming in, remounts of the key moving averages. That's our trigger for an entry. So we're in skills right now. We already talked about being in Tesla, so I won't go over that one. That was a remount of the 50-day moving average, back on continuation pattern. And then BIB, we are in biotech ETF as well. There's a stock called BIIB here that had an approval of an Alzheimer's drug. There are a lot of companies in biotech working on Alzheimer's. So the fact that for the first time in like decades, there was a new approval is really strong for biotech in general. So we played the ETF BIB. And you can see here, we played the remount of the 9 EMA. This run here was related to that approval news. It pulled back when we saw that it was holding the 9 EMA. That was our trigger for entry. And we are targeting the top of the range around 112. All right, a few questions here. Kursden is asking about oil stocks, and we are actually in, I didn't point it out here, we are in ERX right now. So Kursden was asking about ERX. We are in, I like energy a lot, oil and gas. If we pull this thing out, you see the bottoming formation here. You see the continuation, which has formed a big cup and handle pattern. Now we're waiting for this handle to break. So we need a break of this range around 31. I think once that happens, that's going to set up a big run in energy. And energy stocks are looking very healthy too. If you pull up something like Halliburton, you can see just how strong this stock is. And most energy stocks are looking like this. All right, so that's what I want to go over with you guys today. I was going to show you the little graphic here with the 4th of July deal. I don't have that here. I don't know if Josh, if you're still here, if you can post that in the, there we go. Nick here. Nick also is with Bulls, and he's got the link there. If anybody wants to click on that link, check it out. You're going to get 50% off the annual. And on top of that, you're going to get a free class. And by the way, with the swing service, you already get a boot camp. And on top of that, you'll get one of the specialized classes I do every quarter. So I think it's the best deal I've ever actually seen from Bulls. So if there's ever a time you want to check out the swing service, this is the time to do it. I'll actually go over a little bit of the service as well. You get the chat room here. You can see all the postings in here. This is a good resource here. Just, all of like minds who tend to think the way I do. We all swing trade, essentially very similar styles. A lot of posts in here. You get a daily swing report video from me with the focus list I was talking about. Someone had asked a question about what I'm scanning for every day. You get the stocks that I'm watching. You get my market analysis. We go, this analysis you saw here, that's in the video, along with a bunch of stocks we're watching. Alerts for any of the positions we are taking as well. And of course, you have access to me. You can email me anytime. And you have access to a swing trading boot camp as well, which goes over the strategies that I trade. So thank you for joining me, guys. Coffee with Paul today. I do these twice a month on Saturdays. And the other 2 weeks that I'm not doing Coffee with Paul, you'll get a weekly report. So if you haven't already, sign up for that Bulls on Wall Street email, and you'll get these every Saturday or Sunday. And this should be recorded on the Bulls on Wall Street YouTube page, and that'll be up there probably later today. So looks like that's the extent of the questions. Thanks everyone for joining me. Until next time, I will talk to you soon.